It's CBS News on the Hour, sponsored by JTV.com.
I'm Deborah Rodriguez. Week 3 of the Iran war, and the White House is pushing back. Some NATO allies snubbing his call to help keep shipping lane in the Middle East. It's global oil supplies moving again. Spokesman Caroline Levis.
These countries are absolutely benefiting from ensuring that Iran can never obtain a nuclear weapon. This is something not just the United States, but the entire Western world has agreed with for many, many years. So I think the president is absolutely right to call on these countries to do more. To help the United States to reopen the Strait of Hormuz.
Those Iranian women soccer players have been having second thoughts about seeking sanctuary in Australia. Iran state media report the captain of the Iranian women's soccer team has withdrawn her bid for asylum in Australia and will return to Iran. That means 5 of the original 7 players have now changed their minds under unbearable pressure, it seems, from the Iranian authorities, who human rights activists say threatened the women's families with reprisals. Fear of reprisals for refusing to sing their national anthem at the tournament in Australia is what led the women to seek sanctuary in the first place. Vicky Barker, CBS News, London.
Spring is 4 days away, and so far signs are it will come in like a lion.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. President Trump is urging other countries to help secure the vital Strait of Hormuz as Iran vows defiance. Oil markets remain on edge as traders assess the flow of crude after the U.S. struck military sites on Iran's Karg Island. Plus, Trump reportedly warns he may delay his summit with Xi Jinping unless China helps keep the strait open, citing Beijing's heavy reliance on Middle East oil. It's just gone 9 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. It is day 17 of the Iran war. Plenty of developments to walk through over the course of the weekend. And of course, one of the major ones was the U.S. striking military infrastructure in Karg Island, Iran vowing retaliation for that, and ongoing efforts to secure a safe passage of vessels going through the Strait of Hormuz. So all of that still to digest. The U.S. administration signaling that the war may still go on for a couple of weeks. So how are markets reacting? The handover from Asia Pacific today slightly muted, more of a cautious tone prevailing. We're down about 9 basis points, but there is a bit of dispersion there because actually the tech indices continue to do quite well vis-a-vis other indices, of course, the ones that are more susceptible to oil and oil imports. We'll talk more about that in a moment. S&P futures leaning towards a green, interestingly enough. So brushing off some of the events from the weekend, the geopolitical events. We are heading into a major week for central banks. I should say we've got the Fed meeting coming up this Wednesday. Going to be plenty of questions about the Fed's reaction function in light of the big uptick that we've seen in commodity prices. But it's not just the Fed. We also have the Bank of England, the ECB, and the Bank of Japan to watch out for as well. So big one in terms of central banking. Brent, take a look at where we are. Obviously, that is the main release valve for what is going on around the Strait of Hormuz, just shy of $105 here, up 1.6%. So still up significantly since the war began. And the U.S. administration have introduced various policy measures to try to take some of the heat off. But ultimately, as long as the strait remains closed, we're going to continue to see a constriction on the physical supply of oil. That is what's happening. And then USD this morning slipping a little bit. We were down 16 basis points. But since February 28th, which was day one of the war, we are up more than 2.2%, which tells you that to a certain degree, the U.S. has benefited from being a safe haven asset. Let's switch over, take a look at the terminal chart. This is something I wanted to flag to you. And of course, we've seen a stark reaction across many global indices, Asian markets, European markets, the U.S. now Take a look at the S&P. We are sitting at a key support level per our colleague Anthony Stevens around the 200-day moving average. So we'll see whether we can get some support of that level, so whether we can bounce off it, or whether we break through to the downside. So key level here, 200-day moving average for S&P. Let's go back to the main developments though over the weekend. US President Donald Trump is demanding other countries contribute to the defense of the Strait of Hormuz as it remains effectively closed to oil tankers. However, his call is getting little enthusiasm from allies, from Japan to Australia.
These countries come in and protect the place from which they get their energy. And they should come and they should help us protect it.
Now, that's as the US and Iran keep up strikes against each other. The Islamic Republic carried out retaliatory attacks on Israel and Arab states after the US struck military sites on Kurg Island. For more on this, we're joined by Bloomberg's Onur and Patrick Sykes. Onur, I'm going to start with you. Let's talk about this attack on Kurg Island. Marks a big escalation. Do we have a better understanding of what the US is thinking on where the war is headed?
The short answer to that question is unfortunately no. What we have from the US so far is a list of somewhat conflicting messages on how the war might unfold and what the end game really is. We have seen President Donald Trump going from declaring an early victory in the conflict, in the war on Iran, to various comments where he suggested the conflict will go on until he clearly feels that the victory has been achieved. The objectives, the war objectives have been achieved. And that's where the real lack of clarity really is. And we have seen that issue come to a head just a couple of days ago when Donald Trump held a phone call with leaders of G7 countries, where he was repeatedly asked to clarify the objectives of the war from the point of view of the United States, and he repeatedly declined to clarify what those objectives are, and that's what is creating the tension between the U.S. and the rest of its allies. And we have seen this playing out over and over again, which is why we don't know when exactly the war might come to an end. And more importantly, we don't know what exactly would allow the US president to basically declare victory after he went from declaring early victory already to saying that he doesn't quite feel Iran is quite there yet, and therefore he doesn't see an immediate end to the conflict, Jemima.
Yeah, let's talk about the Iranian perspective. Patrick, Trump has suggested in an interview with NBC that the Iranians do want to talk. However, we've heard contradictory comments from the foreign minister. Take a listen.
No, we never asked for a ceasefire, and we have never asked even for negotiation. We are ready to defend ourselves as long as it takes. And this is what we have done so far, and we continue to do that until President Trump comes to the point that this is an illegal war with no victory.
So, Patrick, what more are the Iranians saying?
The Iranian position is basically we need to continue this until we feel that we've re-established a sense of deterrence to avoid it happening again. From their perspective, they've held talks twice now in the past year, both in the run-up to the current war and the run-up to the June 12th.
As well as trying to help guide you on what the market might do.
The war And both times the US surprised them with what ultimately became a military operation. So what they don't want is to sort of sit around the negotiating table again, only to find that pattern repeated or to reach some kind of ostensible stability, status quo, only for again the US and or Israel to do it again in a couple of months. So they see this as a much more drawn out war, the latest battle in a longer fight, and they want to make sure that it doesn't happen again. They also talk, the language is all about teaching the US a lesson, right? They talked about seeking compensation, they talked about seizing assets even. So they really feel that they're on the receiving end of a war of choice, a war of aggression, and they need to reestablish deterrence and make sure the US, Israel isn't tempted to do it again.
Yeah. And let me go back to Honor, because one of the other major developments, I mean, we have to focus that there are two things going on here. One, the military operations, but then also the US administration's attempts to reopen the strait. Trump now urging NATO allies, China, to help with those efforts. What do we know about what he's trying to achieve there?
Well, what happened over the weekend is that he called on the members of the international community, not only allies, but also the likes of China, to send warships to keep the Strait of Hormuz open. Now, that is the single most critical piece, arguably the single most critical piece in this conflict, because Strait of Hormuz is normally where a fifth of the world's oil exports transit, a similarly large portion of liquefied natural gas, and all other quite important commodities. And that's why we have seen wild swings in markets from oil to stocks and bonds across the world since the war began. What Trump did over the weekend was that after suggesting the idea that the US Navy might escort ships through the Strait of Hormuz, which is effectively closed now by Iran. And after doing that, he also called on other countries in the world to keep sending warships to be able to do that, which we've seen him say on Air Force One just a few minutes ago. But the response has been lukewarm, to say the least. Even Japan had to say no politely. And that says a lot about the willingness among the international community to send their navies to what might be a potentially very dangerous mission to keep vessels go through the Strait of Hormuz. As part of a war which began really without US or Israel consulting with any of them.
And Patrick, let me go back to you. After the US strikes on Kyrgyz Island, Iran threatened to retaliate on non-US assets in the UAE. And of course, we saw the reports of the flames and the smoke out of the Fujairah port terminal over the weekend. In addition, this morning, drone interceptions at a fuel depot near the Dubai International Airport. How should we read the response that's coming through from Iran?
Yeah, it's worth saying, I think the latest we know on that is the Dubai media officers said that there were no injuries in that incident and that the situation is still under control. The fire was forgotten. So it looks like potentially something they'll be able to resolve. But you're right, it indicates another sense in which the conflict is expanding. What it reminds me of is the new Supreme Leader's first statements that we got last week, where he was saying that if the war continues, they're going to be looking to open up new fronts. I think the immediate front that came to mind for many people was the Houthis in Yemen and the risk to shipping there in the Red Sea. But it's also the case that they could expand on the civilian side. Iran has sometimes claimed that the ostensibly civilian targets that it's hitting are in fact used by or belong to, linked to the US in some way. I think the varying degrees of credibility. We haven't seen any such claim on this airport attack. And if they did want to continue expanding the war, I think leaning into those civilian type targets would be another way in which they could do so.
Thank you, Bloomberg's Honor and Pat Sites for joining us this morning with the latest developments from the weekend. Now let's turn to markets. The U.S. and European stock futures gaining this morning as crude oil cleared an early 3% jump of the U.S. struck Iran's main export hub, the military. structure, I should say. Joining us now is Ryan Lamont, CEO and co-founder of Neo Vision Wealth Management. Ryan, really good to have you with us. I guess when you think about the knock-on effect that this could have to markets, the direct panel is the energy shock that it's causing right now in the world. How would you describe this moment in history vis-a-vis other energy shocks that we've seen in the past?
Well, the only reference I have is 1973, obviously, where 7 or 8% of the oil and gas production was cut off from the West. So if you really look at today, it's only 20%. So that's more than the double of what we have seen in like 1973. I think markets today are not quite saying adequately the length of the current war, because as long as it lasts 2 3 weeks, 4 weeks maximum, it's still recoverable. But as it lasts longer, and this is what happened in 1973, the pain in 1973 is not only the 7 or 8%, it's the length of the blockade that happened back then. If this extends over several months, then yes, this can have devastating effects on financial markets, I think.
Why do you think the S&P has been relatively resilient compared to European and Asian markets here?
So the S&P 500, if you track it against oil prices, if you look at the inverse correlation between the two, they've been working literally in lockstep. Now let's look at oil prices. If you look at oil futures, because this is what everyone looks at, oil futures today do not reflect where oil prices are, because today there are a few tankers passing through the Strait of Hormuz every day or two, and mostly going to China. The actual oil price is around $140, and users of Bloomberg can actually use their terminal to see that FS DUMO index and then go, and they can see the fair value of the actual price at which oil is trading. So futures today do not really reflect where oil is and the stress that we're focusing on oil. And because S&P is moving in lockstep with oil prices, this is why S&P has been relatively resilient, though tech is down 10% from the highs.
This is wonderful. The AI app builder that turns ideas into reality. From small side projects and side tools and consumer apps, platform at scale. It's built. Thoughts on the lack of performance of gold since the war broke out, and also, silver is down almost 10%, I think, since the start of the war. What's going on there? Why is it not acting as you would expect it to behave in a time of geopolitical crisis?
Well, we are not in a geopolitical crisis. We are in a war, and literally in a massive war happening here in the Middle East that has the potential of expanding further out. So we have other shipping lanes that can be closed here in the Middle East. So this could have really much bigger proportions. Now, when this happens, people tend to run to cash, and this is why the US dollar has been an outperformer, because people have they want to hold cash. Cash is king in these situations. So we dump assets and we hold cash. All bets are off. We are in a BCP mode from a financial market perspective. And this is why you see gold, like many other assets, are underperforming, or they lack performance, if you will. And US dollar is the winner in this. And this is exactly what we're doing. We're sitting on the sideline, we're waiting, and we're holding on cash.
Yeah, would you hold the USD here? To your point, the dollar actually has done quite well in the last couple of weeks.
Well, it's more Swiss franc for us than US dollar. Would be much more comfortable in the Swiss franc, because we believe that US dollar could exhibit some very high volatility. If the situation gets resolved very quickly, yes, we can see US dollar weakness again. If it continues for much longer, we can see more strength. So for us, it's much safer to hold Swiss francs than US dollar.
And let me just round things off. On a typical week, we probably would have started off our discussion around this, but we've got the Fed's meeting coming up on Wednesday. What are you expecting to hear from them? And is it going to be the case that the Hawks will be back in the driving seats?
100%, because when you have an oil shock, it's a deflating problem.
So welcome back to a new week. Monday morning. We open here. No news today, not until Wednesday. Big JP at the Feds will make a big massive announcement. we lost almost 2% last week. And then we're able to try to get some back here for this week. We got 10 minutes down to initial balance here. Should probably get out at this high. Takes this liquidity, I'll probably get out. Yeah. So for this liquidity grab here, watch out this here. There's the liquidity, we're out. Got the liquidity on high. We'll take that. 1%, that'll get us back from our losses last week. Could have minimized that loss. I mean, to down to 1%, almost, it was like 1.5%, almost 2% on that loss. But I could have minimized it and then just but it's okay. We get it back this week. So we got nice 1% there. And now we're waiting for our initial balance. Once 10:30 hits here, about T-7 minutes, we'll have our initial balance, and from that level, we can. I mean, we've been above. We're pushing away from value here. I mean, higher and higher. But let's get back to our news. Another update momentarily after this initial balance is set.
And placeholder. Well, coming up, oil markets are set for a tumultuous week as the U.S. attack on Iran's Karg Island raises the stakes.
Let's analyze first. Why did I take this trade? We have our delta CV. Yeah, the delta there is above. Delta is above the 0. It's showing strength. I mean, all of these are positive deltas, which means we're bullish this morning. Opened up gap open. We can even go to let's go to our sessions. I mean, it's been bullish since the Sydney here. Sydney made higher, trying to come back. I think they're targeting all this liquidity up here. Looks like these levels here, which was yeah. It's like that's the target from this is from Friday's New York opening high. Manipulation here to drop, and they trapped these buyers. Trap buyers trying back to get that liquidity, but it's just been going up since Sydney all the way through the Asian session here, just consolidated, arranging. The range was just higher highs, higher lows. And all the way into London here. London tried to push back down, came into POC. Found support here. This action, and then these sellers here. Looks like aggressive sellers came in here. Got trapped, stuck sellers here. So here, stuck. These are trap sellers. And pushed all the way up into the New York Open here. Massive bull candle. Strong buying volume here. Held this level and stayed above value high. But it looks like we do have some sellers in this seller volume here. And I was just taking this pivot. What was it? Let's see. Yeah, this pivot here off of this liquidity, which was a support. This is support level. On this pivot here, and massive seller tried to come down, and the buyers, the bulls protected this level, and that's why my entry long, and just nice little short term from this level to the high, and that's about 100 ticks right there. So once our initial balance is set here for the session, we'll be able to find another setup possibly. That's in about a couple more minutes here. More sellers in this level. Looks like bulls tried to break through, got rejected, and now it's trying to come down below value, or POC. If we come back down, POC level here, buyers can't swing back above this. Sellers protect this level. We could rotate back down and target the gap. Come back to this gap. I mean, this is a long ways to get to this liquidity down here, but this area, very possible today. I mean, for this daily range, we've only, I mean, look at the range here from the opening. You're talking about a 1,500 tick range here. From that top, from the high today to this, it's only 600 ticks. That's nothing for the NQ. So hey, looks like our initial balance is set. So I think we're gonna get the low of that, and the low, and then the high of the initial balance. here. There is our range. That's been set. And now what we do, we wait for this range. Okay. Maybe there. Run this out. And the top of this could be another range, and the bottom of this, it just depends where the price wants to go from here. Just wait for another setup. We're just gonna react to what price is doing within this range. If we're gonna break out higher, stay back, go back above POC, or stay below this POC and rotate back down. That's what we're waiting for.
We discuss the impasse with Matt Stanley from Kepler next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Hamada Versacci in Dubai. Oil fluctuating this morning after Iran said crude flows were continuing from its main export hub following attacks on military facilities. It comes as President Trump raises pressure on nations to help reopen the Strait of Hormuz. So joining me now is Matt Stanley, marketing engagement head at Tapler Real Traders right now.
Yeah, look, it's a very good point. You know, carb's importance for Iran is just logistical. It's economic. It's critical. 94% of crude oil that's loaded out of Iran comes from Cargo Island. It reached a peak last year of about 1.7 million barrels a day. It's seismic for the Iranian economy, just how much oil does flow out. Obviously, we heard there's only military installations that were targeted. No disruption to flows yet, even with the Straits of Hormuz section.
Yeah.
Massive rejection at POC, and let's see how we react at the value low. We need to see what price does at the value low. Can we pierce through it, break down through it, and can then rotate all the way down, or protect it like here? This was strong level here that was protected by buyers to push back up. More rejection. Look at these wicks. Strong rejection by the bears.
Is going to be the main avenue in order to build security through the Straits.
Yeah, and of course, it's paramount that the transit actually does restart, and the passage of these ships does restart through the strait. One thing I do want to ask you, just look at the numbers. The waiver that's been granted for Asian buyers to buy Russian oil. How much of an impact is that actually going to have on the market, especially given we know so much of that Iranian oil was in floating storage as opposed to on land or at Trump Island?
Yeah, look, this is a very important point, and it's something that we've been discussing internally at length. Obviously, what we've seen is that there's a finite timeline between when those barrels are available for purchase. It's mainly vessels and cargoes that are currently at sea. That's long committed. There's still a few cargoes of Russian oil that are committed, mainly from Indian and Chinese buyers. It buys time for sure. The market is something the market has been yearning for. Is it's a bit of respite and a supply squeeze. It's only for cargoes that have loaded essentially between the 12th of March and I think the 11th of April. I can't remember the exact date. Excuse me on that. But it offers respite, but only for those who are able to process it if it works in the refineries. Which Ural's the main grade that Russia export does, especially for European refineries. But for the Indian buyers, it certainly frees up a lot, even if economically it isn't as attractive as it was prior this waiver.
Yes, I saw the Urals premium to Brent has shot up significantly just in the last couple of weeks. Let me ask you about the IEA record announcement, the stockpile release. Interesting that also they're saying over the weekend that oil from the stockpile release will be made immediately available in Asia versus for Europe and America, it's going to be available from the end of March. Does this just also underscore the situation that many of these Asian buyers are in and that they desperately actually need these stockpiles to be released?
Yes, that'd be right. Good question, a good point. This is something the market is concentrating on. We think up to about 45 days of leniency, supply cover in the market. Like you said, 400 million barrels. The biggest release ever. It is a cohesive agreement, and it is incredibly important, especially for buyers in Asia, which are the vast majority net importers of crude oil. The 45 days there is an important point of reference. What it does, the market right now is pricing in supply disruption, not supply destruction. And I think that's why prices are kind of hovering around that. The IEA, the US waiver for sanctioned Russian oil, they all go to appeasing the end user, the buyer, the Chinese, the Japanese, the Indians, anyone east of the Suez, really. But yeah, it's all about stabilizing the market in the short term. That's what the real focus is right now.
Yeah, Matt, let me pick you up on something you just said, that the market is pricing in supply disruption, not supply destruction. In an event of supply destruction, where do you see Brent going to?
Well, this is unfortunate. You're the first one to ask me that question, and it's a wry smile on my face. It's the only sort of comparative I can put against it would be what happened during COVID. The opposite, though. We saw demand destruction there, and I remember falling off my chair when WTI went into negative territory. No one's foresaw that situation ever happening. If you flip it now to a supply issue, where does flat price go? We hit $119.50 last Monday, and we kind of steadied off. We're down $20 a barrel at the end on Friday. Refining margins were down. Freight was down. Is that temporary? Look, no one wants to price in the situation, and I think those who are trying to price it are fearful of that situation. Right now, it's destructive. It's not destructive.
Yeah, and you're still sitting on your chair, so that's good. Matt, thank you so much for joining us today on Horizons. Matt Stanley, Market Engagement Head at Kepler. Thank you so much. Well, coming up, Gulf economies could face their worst month since the early 1990s. This is on board Jack's on. We discussed what would take with Redmond Rack.
I'm looking for shorts. Looking to short this market.
Good morning. This is Horizons Middle East and Africa. Our top stories this morning. President Trump is urging other countries to help secure the vital Strait of Hormuz, calling out China in particular. He throws a summit with Xi Jinping into question. Oil markets remain on edge as leaders assess the flow of crude after the U.S. struck military sites on Iran's Karg Islands. Plus, Iran remains defiant. Foreign Minister Abbas Araqi says Iran had not sought talks or a ceasefire after Trump told NBC he was willing to make a deal but on better terms. It's just gone 9:30 a.m. across the Emirates. I'm Joanna Versace in Dubai, still very much in the thick of the war. Day 17 now for the since the war started, and some big developments over the course of the weekend. We just discussed in the first half of the show those U.S. strikes on Karg Island targeting military infrastructure, but of course raises the stakes. This as the Trump administration are doing what they can to try to force the reopening of the Strait of Hormuz by building up a coalition of partners. And Iran continues to retaliate on Israel and Gulf states' key infrastructure. Now, in terms of the market reaction today, the Pacific, slightly more cautious. We're going to get into that in just a moment, down 0.2%, but not a major drawback, I've got to say, drawdown there. And so we are seeing As some upbeat news come out of China's economy. Again, something to unpack in the next 15, 20 minutes. We'll get into that on our show. As for S&P futures, leaning towards positive, up 0.5%. Big week in terms of central banks, about the Fed on Wednesday. Let's see whether they change the tone and sound slightly more hawkish, given the commodity price shock that we've had since this war began, especially the price of oil. Brent, speaking of oil, just shy of $105 now, up 1.8% on the session, as we continue to talk about the physical supply hit that is taking place right now in this part of the world and the knock-on effect that it's having on buyers that are all over, particularly in Asia, where some key countries, including China, have been forced to make some adjustments in terms of their own export activities from refineries. And in the USD, slipping a little bit today in trade, down 0.2%, but still up more than 2% since the war began. And actually, it's one of the best defensive assets out there. If you look at the complete picture, say, versus how US treasuries have performed, it is higher, and like inflation, gold and silver underperforming the war. And then switching over to the point for S&P, we are sitting on a key technical levels here, about 200 days, a moving average. Let's see whether this key support level actually holds or whether it breaks to the downside. Magnificent 7, if we deep dive specifically on that basket, is technically in direction territory. So from market insights, let's go across Bloomberg Executive Editor for Asian Markets, Paul Dobson. Let's start with the here and the now poll. Cautious price action and handled from April this morning. So nothing really that speaks of any, hysterical reaction to the show. So actually, you get from the you just have to earn more money on the money.
I do.
It's volatility was extreme. This one is remarkably calm on the bid side of that, with, as you've been describing, energy prices relatively stable, equity markets comfortable enough as well, and the dollar weakening a little bit. I think, investors are choosing to look on the positive parts of the news, the idea that, well, let's put it this way, everything really depends on exactly how long this war goes on and how deep the interruptions in terms of the energy supply for the rest of the world are. So anything that indicates that maybe we're getting closer to the end of the war is something that the market will take as a positive. So they will look through the data and see, there's some possibilities that Trump is getting closer to talks with Iran again. There's some possibilities that he might put together some kind of a coalition that will enable more ships to come out of the Straits of Hormuz. And there's some energy already flowing for that matter. So markets taking those things as a slight positive maybe, and nothing too much more alarming as maybe the more negative, I guess you could say, on the flip side of that.
Even though Iran continues to retaliate and remain quite defiant. So let's see whether that optimism is justified. It is a big central bank week coming up. There's plenty of central banks to watch out for. Bank of Japan, ECB, Bank of England, and the Fed, also RBA too. What are you watching out for in terms of commentary and potentially even action out of some of these central banks this week? Given this is the first chance we're really going to be hearing from since this once again.
That's right, and it's going to be really fascinating to see how they respond. I think Australia is kind of an easy one because the market expectation is for them to get on with hiking interest rates sooner than later. They're already in that sort of a process. For the rest of them, it's a little bit more mixed. The market had been pricing for the Federal Reserve, for example, to be cutting interest rates again this year. It's moved right away from that. So now, what will the Fed say? I was talking to my colleagues. I said, well, surely, at the moment, at least this war is just a short-term shock, because once it's over, if it's over, then the energy flows could start again relatively quickly and bring those prices right back down again. And they said, well, the Fed and all of the central banks for that matter are so cautious about using the word transitory or sort of like short term, given how much they were burned by the last price shock that we saw, an inflationary shock post-COVID. They're much more cautious. So they're much more likely to sort of sound the alarm a little bit on the possible inflation outlook. But for the Fed, there's even more complicated because the last jobs numbers that we saw were so awful that they need to think about the other side of their mandate, economic growth, and not just inflation. And if they think that actually the threat to growth is worse than the threat to inflation, then maybe they will start to be, or the market starts to tip back towards the idea that they're going to be cutting interest rates this year. So it's going to be really fascinating to see what the policymakers have to say there.
So, thank you so much for joining us, Joel. Always good to chat to you. Paul Dodson, our executive editor for England. The world economy could face their worst month since the early 1980s if the Iran war drags on, with some forecasts warning of sharp contractions should disruptions to the Strait of Hormuz persist. Despite the broader economic risk, rating agencies say the region's banking systems remain relatively equivalent for now, supported by strong capital, liquidity buffers, and the expectation of sovereign support. Joining us now to discuss this, Red